All right, everybody, ready to dive in. Buying a home, it's a huge deal, right? And in this market, let's just say it's easy to feel a little lost.
Absolutely.
So we're doing a deep dive today. Expert analysis, fresh insights, all to help you feel confident navigating the 2024 U.S. housing market. Especially if you're a U.S. citizen, this one's for you because, let's be real, interest rates lately. It's like watching a kid on a trampoline after a soda, up and down. Who knows what's next?
And that up and down
Hmm.
directly impacts what you can afford each month, those mortgage payments. Information is power. That's where we come in.
Our expert source keeps stressing real estate is local, 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 right?
It's true.
So those interest rates matter big time, but so does how many other folks are trying to buy in your neck of the woods.
Competition is fierce in some areas.
Before you even open those house hunting apps, crucial financial prep. Gotta do it.
It's the foundation, really. And speaking of foundations, credit score. We got to talk about it.
Oh yeah, that magic number.
More than just getting approved, a good score now could save you literally thousands over the life of your loan. Lenders, they're being picky these days.
Makes sense. What if someone listening, their credit score isn't stellar? What then?
Don't panic. FHA loans, they're designed for situations just like that. Lower scores, smaller down payments, all that. Knowledge is your friend. The more you know about different loans, the better you can find the perfect fit.
Okay, so no need to despair. What about that debt-to-income ratio? Always sounds kind of scary, to be honest.
It's simpler than it seems. Picture your income like a pie, okay?
Okay, pie. I like where this is going.
That ratio tells lenders how much of your pie is already gone, eaten up by student loans, car payments, credit card bills, all that.
So bigger, the slice missing.
Less appealing you are to a lender, exactly. They want to make sure you can handle a mortgage payment on top of everything else. Ideally, you're aiming for under 36% debt to income. That's the sweet spot.
Sweet spot, got it. Now, down payments, classic home buying hurdle. Is 20% really always necessary?
It's a myth, honestly. 20% helps you avoid things like PMI, that's private mortgage insurance, but it's not the only way.
So other options if you, say, don't have a huge pile of cash just lying around.
FHA loans, like we said, those can be as low as 3.5% down. And for veterans, VA loans, 0 down. Incredible benefit.
Wow, okay, good to know. So many different paths here, I like it. Any other costs lurking in the shadows? Besides the down payment, I mean.
Closing costs, don't forget those.
Ah, yes, those. Easy to overlook in all the excitement.
They sneak up on you. You're so focused on the down payment, then bam, these extra expenses right at the closing table.
So what falls under closing costs? Remind us.
Usually about 2% to 5% of the home's price. Appraisals, inspections, title insurance, all the behind-the-scenes stuff that makes it official.
Not exactly pocket change.
Nope. Best to factor that into your budget early on so there are no surprises.
Speaking of finding the right fit, choosing a mortgage, it's kind of like finding a dance partner, you know? Gotta move well together.
I like that analogy.
And just like a good dance partner makes it more fun, the right mortgage makes this whole process way smoother.
Tons of options, so it can feel overwhelming. That's why finding one that matches your goals, your risk tolerance, super important.
Okay, let's break down the two most common ones, at least for today. Fixed rate mortgages and ARMs, the adjustable rate ones. Main difference in a nutshell.
Fixed rate, it's all about stability, predictability. Interest rate stays the same for the entire loan, usually 15 years, 30 years, that kind of thing. Great if you value peace of mind, not worrying about the market going haywire.
Especially these days, peace of mind sounds pretty great.
Right. Now, ARM, your rate is fixed, but only for a set time at the beginning, maybe 5 years, 7, 10, depends. After that, it can adjust up or down depending on what interest rates are doing out in the world.
So a little bit of a gamble.
There's a level of uncertainty, yeah. ARMs are tempting because they often start lower than fixed rates, but could end up paying more in the long run if rates go up.
Makes those initial low payments a little less appealing, huh? How do you decide which one's right for you?
Honestly, if you see yourself staying put, 10 plus years, that kind of thing, fixed rate, that stability is hard to beat. But if you think this might be a stepping stone, you'll move before that fixed period is up. ARM could save you money in the short term.
All about weighing those options, figuring out your own risk tolerance, right?
Exactly.
And of course, shopping around, different lenders, getting those rates compared, working with someone who really knows their stuff, that's never a bad idea.
Never a bad idea to have an expert in your corner.
Okay, so finances, check. Credit, down payments, even dipped our toes into the mortgage pool.
Literally.
Now for everyone's favorite part, the dream property itself.
Ah, yes. the fun part.
Our expert gets into the difference between buying your home, like the place you live, versus buying as an investment property. Big takeaway there.
Mindset and strategy. Primary residence, you're looking for your needs, your comfort. Investment property, you're thinking rental income, how much it'll appreciate in value. Different ball game.
So location matters for both, obviously, but even more so with an investment, yeah.
100%. Strong rental demand, potential for the area to grow in value. That's key.
Location, 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 as they say.
They say it for a reason. Our source, they highlight some interesting stuff happening in the Sun Belt. Texas, Florida, Arizona, those areas, big population growth, which usually means high demand, good potential for prices to go up.
Before everyone packs their bags and chases the sunshine.
Right, right.
Our expert reminds us, real estate is local.
Couldn't have said it better myself.
Okay.
Just because a state's booming doesn't mean every street corner in that state is going to make you rich.
Do your homework,
Yeah.
people.
Exactly. Your needs, your budget, be realistic.
Don't blindly follow trends. Strong job market, lifestyle you actually enjoy, even climate change resilience, these things matter. Speaking of what matters, different types of properties, that's going to influence your search too, right?
Of course. Single-family homes, condos, even multifamily units if you're feeling ambitious. Each one comes with its own set of pros and cons.
Lots to consider, folks, and we'll dig into those different property types right after a quick break. All right, so we're back and ready to talk house styles.
Yeah, the fun stuff. Single-family, condo life, maybe even becoming a landlord.
Our source, they really highlight those single-family homes. Classic choice. People wanting space, privacy, that's a big draw.
Makes sense. Yard, your own little domain, no upstairs neighbors stomping around.
Exactly. Though I imagine that space comes at a premium, right? Price-wise, I mean.
Usually, yeah. And bigger space often means bigger maintenance costs too. Something to factor in.
Oh, good point. You're on the hook for everything with a single family. Roof goes, you're a problem.
Yep, whereas a condo, opposite end of the spectrum there. Great for first-time buyers maybe, or anyone who wants that low-maintenance lifestyle.
Because you're paying those HOA fees, right?
Yeah.
So in theory, stuff's getting handled.
Right, HOA covers a lot of the basics. Building maintenance, landscaping, sometimes even utilities. Depends on the place.
For trade-off, you're paying for convenience, but also less control because the HOA has rules, right?
For sure, for sure. Got to read that fine print, see what you're signing up for. Some are stricter than others.
Definitely. Now, multifamily units, that's a whole other ballgame. Our source mentions those, and it's like instant landlord status, huh?
Yeah, if you're into that. Live in one, rent out the others can really help offset that mortgage.
Sounds appealing on paper, but being a landlord, that's not for the faint of heart.
No, it's work. Got to find good tenants, chase down rent checks sometimes, deal with repairs.
Broken toilets at 2 a.m., that's the glamorous landlord life.
Pretty much. But if you're up for it, can be a solid way to build wealth over time. That passive income stream.
Okay, so we've talked finances, we've talked property types. Now, let's get real about the buying process itself. In this market, it's a battle out there.
It can be, yeah. Our source makes a big deal about pre-approval for your mortgage before you even start seriously looking.
Why is that so crucial?
Show sellers you're serious, that you can get financing. It's competitive. They're more likely to pick someone who's got their ducks in a row.
So pre-approval letter, that's like your golden ticket.
Pretty much. And while we're talking strategy, real estate agents. I know some folks try to go it alone, but honestly,
Probably not the best time for that, huh?
a good agent, they're worth their weight in gold. They know the market, they know the tricks, they can negotiate on your behalf.
Plus, they've seen it all, right? So even just having that calming presence when you're about to make the biggest purchase of your life.
Exactly. Emotional support counts for something, especially in a stressful market like this one.
Okay, so let's say it all worked out. You found the place, survived the offer process, the inspection. You're officially a homeowner.
Congratulations. Champagne popping.
But the journey's not over, is it? Property taxes, for example. That's the fun never ends.
Ah, yes. Those pesky taxes.
Ugh.
Unavoidable, but they vary wildly depending on where you live.
Our source points out Texas, New Jersey, known for those high property taxes. Woof.
Yeah, whereas Florida, Nevada, no state income tax. So trade-offs, right?
I love those trade-offs.
About the bigger picture.
Okay, so taxes, we're aware. Anything else we should be mentally preparing for, financially speaking?
Mortgage interest deduction, that's one. Might as well take advantage if you can.
Always nice to get a little something back.
Right. Basically, you deduct some of that mortgage interest from your taxable income. Could save some money come tax season.
Every little bit helps, as they say. Okay, what about capital gains tax? Now that one sounds scary.
Sounds worse than it is, for most folks at least.
Mm-hmm.
So, say you sell your home and you make a profit.
I like where this is going.
You might HO taxes on that profit.
Yeah.
AT, big BUT. There's an exemption for your primary residence, the place you actually live.
Music to my ears. What's the catch?
You gotta have lived there for at least 2 of the past 5 years. And the profit can't be too huge. Under $250,000 for single filers, $500,000 for married couples. You're golden.
That's a pretty sweet deal, honestly.
It is. Encourages people to actually live in the homes they buy, not just flip them for a quick buck.
I can get behind that. Okay, so we've done the upfront costs, the closing roller coaster. Now for the day-to-day reality of owning a home. Maintenance, repairs.
Ah, the joys of home ownership. That leaky faucet isn't going to fix itself.
Nope, and those costs can add up. Our source really emphasizes having a budget for that.
Crucial. Emergency fund, whatever you call it, got to have something set aside.
Yeah.
Because a broken appliance, it never happens at a convenient time.
Murphy's Law of home ownership, for sure. And on top of the surprise stuff, there's the regular expenses too, right? Utilities, HOA fees if you've got them.
Exactly. It's all part of the big picture. Got to factor it all in.
Budgeting, always sexy. So true. Okay, let's fast forward a bit. You're in your forever home, mortgage is chugging along, life is good.
Sounds peaceful.
But then, because life is life, you gotta move. Maybe a new job. Maybe you won that lottery ticket. What then? What happens to the house?
That's when all this planning we've been talking about, it really pays off. You've got options. Selling is the obvious one.
Ideally for more than you bought it for, right? Appreciation, that magical word.
Exactly. But even if you don't get rich off it, selling gives you that clean break. You can move on to the next thing.
And say you're not ready to say goodbye, emotionally attached to the place, whatever it may be.
Renting it out, that's a possibility. Become a landlord, like we were discussing earlier.
Right, with those multifamily units, same idea applies here.
Exactly. Generate some income, that can be tempting for sure.
Comes with its own headaches, though, as we've discussed. Tenants, toilets, the whole 9 yards.
True, true. Big decision, weighing whether that passive income's worth the hassle. But it is an option. Good to know you've got it.
Okay, so many moving pieces here.
That's the real estate game for you. Never a dull moment.
Our source, they gave some great final tips for navigating this wild 2024 market. What were some of those biggies?
Monitoring interest rates, that was huge EE for them.
Can't say we blame them. Those things are like a seesaw lately.
Even little changes impact how much house you can afford. So staying informed, that's key.
Staying informed is free, folks.
Exactly. Along those lines, budgeting carefully, can't stress that enough. Especially now, those hidden costs we talked about. Closing, potential repairs down the line.
Got to factor it all in.
Have to. And, never hurts to have a pro in your corner. Real estate agent, mortgage person, even a financial advisor if you're feeling fancy.
Your own little home buying dream team.
Exactly. It's a big decision. This isn't buying a pair of shoes. Having people who've seen it all can make a world of difference.
Could not agree more. Well, folks, there you have it. Interest rates, mortgage options, the different properties out there, where to find them. We even touched on being a landlord and that whole capital gains tax thing.
We covered a lot of ground, a lot of info to digest for sure.
Hopefully you're feeling more prepared than overwhelmed, though. That's our goal.
Knowledge is power, especially with something as big as buying a home.
We focus on the U.S. market today, but man, it really makes you wonder how different it all is for international buyers.
Oh, whole other world. Different rules, different risks, different everything.
That's a deep dive for another day. But until then, everybody, happy house hunting, make good choices, and we'll catch you on the flip side.